Hello everybody, and welcome to this month's surgery. And it's on candlestick charts, and it's a big subject. And so I've kept it to some simple but very important rules when using candlestick charts, which a lot of people overlook. So I think this is essential in using candlestick charts. This session attracts continuous professional development points for people in Hong Kong, and of course you will get a certificate at the end, I think, from LSEG. If you want to message me on any of the points, you can always email me at Beta Group. This is just a very small section of our training courses that we offer, and I hope you find this of value. So I have to always start by saying, this is for educational purposes only, and if you want the slides, you need to stay to the end of the session. So just remembering where we're at in the schedule that we've put together for LSEG today builds on what we've already done. In terms of our training course, we are still very much in the early session on the first day of our training. So this is a progression, and hopefully this builds on what you've already learned here. I've said before, technical analysis is my life. I'm qualified. I've got a master's in financial technical analysis, the MFTA. As I mentioned, this content comes from our 2-day intensive courses. We give these all over the world. I will come to you anywhere in the world. I write travel books as a hobby, and I've been to over 100 countries. So I'm happy to come to you anywhere. And this is a quote from someone I gave training to some months ago. And I like the way they said, highlight topics and tools that we can start using immediately without any unnecessary distractions. And I think this is really the key factor about training, is what's important. And so we'll remember that we've talked about time horizon, then we talked about trends with support and resistance, and last month we did reversal and continuation patterns. We talked about price patterns. All of these things we cover today using candlesticks. So it's essential that we've built on what we've already learned, and that's a really important part of the training. The book that I most like is this one, is Candlestick Charting Explained. And this is by Greg Morris, and there is actually in the Murphy book a chapter on candlesticks, and it has all the candle patterns in there. This chapter was actually written by Greg Morris. Candlesticks are primarily about patterns, and those patterns can be a number of candles from 1 candle through to 5 candle. And the key point is, are they a reversal pattern or a continuation pattern? Now, in last month's surgery, I asked the question, on which time frame charts are candle patterns most valid? And this is something that, again, not many people think about. So if you think about the gaps between days or candles, what you can think about is, on a weekly chart, each candle is a week, and the gap between that week is a weekend. And on a daily chart, the gap between the candle is overnight. And on an hourly chart, the gap between each candle is a millisecond. So it's really interesting that on intraday charts, you're not going to see the patterns in the same way that you would see them on daily or weekly charts. So candles are less good on intraday charts or 24-hour traded markets. So when you look at a candle, just think about what it means. If the body and the shadows are roughly equal, this is a neutral day. We've opened here, we've gone up, we've closed lower, and we had a low. That's a neutral day. A little bit smaller would be neutral, a little bit bigger, and we start to get into what we call a directional candle, where the body is much bigger. That directional candle is in line with the trend. So this is a trending candle, if you like. And just understanding this difference is really quite key. And then if we see a big amount of trading range in the day, but we only end up near where we started, this implies a lot of uncertainty, and that in turn often heralds a reversal. And here what we see, I've marked on some neutral candles. The bigger ones are directional candles in line with the trend, and these smaller ones are reversal candles near the top of the trend. But today I want to talk to you about the ones that I think you're most likely to see and the most important ones. So these, for me, are the three main reversal patterns. So the engulfing patterns are the ones that you're most likely to see, and we will look at charts today, and these ones are the ones that you're most likely to see. We could teach all 68 patterns, but you're not going to see many of those patterns, and you may not even know if you've seen those patterns. If we just teach you the ones that you're most likely to see, that gives you the most value. It is always worth looking, as you start your day, what candle did I have yesterday? That's a really key point. What was yesterday's candle? And it's worth noting when you look at a daily chart, the candle on the end of the chart as we're trading that day is incomplete. So I'm about halfway through today. I've kept it fairly simple. I've determined not to show you the all of the candle patterns because there's just a lot to remember. If you want to learn them, I mean, the whole point is to go away and do that yourselves. I've given you the resource to do that. In our training, we do go through those 68 patterns and we talk about them. But the key point is remembering this idea that candles only work well on daily and weekly markets. They're not so good for intraday, and they're not so good for 24-hour traded markets because of that. So that's the real gem of this. So I'm going to wrap up now. So this is where that fits in. You'll notice we talked about time horizon, trend, support and resistance, patterns. We talked about normal chart patterns last time. The candles, they still apply. All those triangle patterns, double touch, double buttons, you're still looking for those patterns in candlestick charts. But I've just gone this month on some simple rules in the candle patterns. Hopefully you'll remember those rules. What market are you looking at? Weekly, daily, or stronger. Remembering the three main candles: a neutral, directional, reversal, and then the reliability. I really am a big fan of engulfing patterns because you'll see those more frequently and they tend to be very reliable. And next month is a really big one. It's different tools for trending and sideways markets, and we're going to just start getting into this, and so that's going to be really quite key. And then we go on to some really nice subjects as we close out for the year. There is no substitute for doing this face-to-face. My next course is in London on the 23rd and the 24th of September, 2 days intensive, 500 slides. So if you imagine here, there's a core element of around 10 slides. It's about 50 times the value of what we're giving you here. And the places are strictly limited to ensure the quality of the teaching. Just a handful of people where we really focus, so you come away from that. And the next session, the other thing is I'm speaking at the IFTA conference, the International Federation of Technical Analysts conference in September. I'm the first speaker of the conference on the first day. Do come to that conference in Frankfurt. I look forward to seeing you there if you're in Europe. And I'm also speaking literally a few days later, flying straight from Frankfurt to Dubai at the CMT Global Investment Summit. That will also be a great event. And these conferences are really valuable. You'll see when I make call outs to people that I've met these people and I've come to know these great technical analysts at conferences. So next month is trending and sideways markets and the best tools for these. And so my question, email me if you know the answer. How do you know if you're in a trending or sideways market? This is a very big part of technical analysis, very big part of what we teach. I look forward to hearing your answers.